posted a strong set in the second quarter. Net interest margins coming in at, I think, an all-time high. I don't remember 4.3 in a long time. Loan growth, the best in, 6-7 years. Kotak Mahindra Bank also very good net interest margin, a multi-year high at about nearly 5.2. Loan growth strong, 25%. Krishnan ASV, the lead analyst for banking and financial stocks at HDFC Securities, with us. Krishnan, good morning. Happy Diwali to you. Well, first up, ICICI Bank has also been backed by the markets for this extraordinary performance. But with this performance, does it still remain a buy? What are the fresh price targets?
Hi, Lata. Very good morning. Wish you all a very happy Diwali with CNBC and your viewers. A flawless performance, near flawless performance. You have to really cut through the comb to get to something that you can flag off. And the only bit I would worry about, Lata, is that a lot of this is asset repricing, which is happening, which is very accelerated as well, right? So while directionally we always thought NIMs will reflate because EBLR, etc., the magnitude of reflation has been a surprise. So we went into Q2 assuming a 15 to 20 bips kind of margin reflation. It's actually surprised us nearly double of that, right? But the only thing which we internally say as well, and most of our publications carry as well, this is a very benign credit cycle and too good to last forever, right? And so when an ICICI Bank is actually able to save for the rainy day, when it's able to put aside some profits for what might go wrong later on in the cycle, I think that augurs very well for the health of the bank. Right? So, we are extremely enthused. It has remained at the top of our pecking order for about 4 years now, 5 years now. And I still continue to see that they are running away with the lead. So now that lead is only going up. Obviously there's one bank which we can't comment about, but outside of that universe, I think ICICI Bank continues to pull away into the lead.
Okay, so leader of the pack continues to be ICICI Bank. On Kotak Mahindra Bank, do you think that the valuations now capture the optimism in earnings, and how do you approach that one?
Oh, there again, I think most of the banks in the system today are running at about a 20% plus loan growth and only a 10% deposit growth, right? So very easy to report a 5% margin. If you start with 4.9, very easy to reflate your margins 30 bips if one side of the balance sheet grows much faster, and that is repricing itself much ahead, right? I think in Kotak Mahindra Bank, the challenge on deposits is going to be a little more acute. They are running at a 90% loan to deposit ratio today. Right? ICICI Bank is at about 86. There are other banks in the late 80s right now. So a lot of these banks which are actually looking at market share gains on the loan book side can only do it now if they raise their pricing on the deposit side as well. They have to up their game, right? It's not just going to be a pricing game, but it's also got to be an efficiency game. Not every bank is used to raising deposits and mobilizing deposits at pace. So either loan growth will have to then align itself to a new reality of deposit growth, which means, slowing loan growth. So at 25% for Kotak may have to settle down probably in the late teens then, right?
Yeah.
Today, it's very easy to extrapolate 30 going to 25 and staying at 25. I think deposit growth is not allowing us to take that call today.
Okay, that's right. Speaking of deposits, a bunch of mid-cap banks also announced numbers. Yes, RBL, IDFC, a lot of them coming out of trouble, or at least hoping to coming out of trouble. Would you, say if you were to divide banks into three levels, we discussed the top echelons. There is a middle level, comprising the federals and, the BOBs. Maybe BOB is in the top echelon now. But there is the bottom of the pack. Do you think there are buys over here now because of the benign cycle and their performance?
So as I said, among the larger banks, very clearly ICICI Bank. And
that
SBI
is not even worth discussing now. It's like axiomatic. That's why I'm coming to the bottom half.
So the mid-sized banks, Federal Bank and City Union Bank are top picks. I think Federal Bank has a franchise deposit which will continue to be at a premium in this kind of environment, right? They sit doing nothing, even then deposits will flow in. Not too many banks can actually boast of that, right? I think they would be very close to an SBI there.
Wow.
But, among the mid-sized banks, those two would be our top picks, Federal Bank and City Union Bank. I think a lot of others are in their journey to kind of, finding their feet, both in terms of profitability as well as, optimization levers. I think Federal and City Union Bank would be the most mature at this point of time.
All right, Krishnan, we've spoken about the banking names. Just one final question before we let you go. Reliance has announced, the demerger of the financial services business, and they're looking to build a digital financial services enterprise. My question to you is on the NBFC space. Do you believe that there is some kind of threat to the valuations because of this entry, or do you think that's too far-fetched a thought?
Too early. I wouldn't say too far-fetched, but too early because, look, some of these NBFCs, and there's only probably one NBFC which has built consistent gates in terms of the digital bridges that they have done. That would be a Bajaj Finance. We do have a reduced stance there, but competitive intensity is a reality, right? If competitive intensity means that profit pools begin shrinking or revenue pools begin shrinking, then definitely multiples do come under pressure. But I think that's still very early days right now. Just an announcement does not really materially change anything. Lots of other NBFCs have tried their hand at doing what a Bajaj Finance does. It's not been easy.
And what is the current multiple you're giving to Bajaj Finance?
We are at about 7 times.
Okay.
Yeah.
Okay, all right. We'll leave it at that, Krishnan. Thanks a lot for joining in. By the way, the pre-opening rates are also settling now, and it's looking pretty good, actually.